Hello and welcome to Corfi Colombiana's Economic Research Podcast. In this podcast, our equity research team is going to summarize their publication Here We Draw the Line, where they explain why they consider the step decline on stock prices at the Colombian equity market exaggerated in the case of some companies, based on their financial stability, natural hedges, and valuation consideration, both relative and intrinsic. Daniel, can you explain the methodology employed to obtain fair values and name some of the factors that were considered? Do you see a market discount?
Hi, this is Daniel Duarte. So, given the recent drop in equity markets, more specifically in Colombia, we do observe a sharp discount in some stocks in Colombia. In fact, the Colombian equity market is trading at a price to book value of less than 1, and Brazil, in contrast, is trading at a price to book value of 1.6. And here it's especially important to mention that the Colombian index has high rates in oil banks. However, given the predictability and strong cash flows of companies in some sectors, for example, such as utilities, and strong demand for products of companies within the consumer staple industry, we did not expect such a sudden drop in the stock price of companies with these characteristics. That being said, we do think that there will be opportunities of long-term value opening up here, and to assess our expectations of recovery, we analyze multiple factors and base our valuation assumptions on the current financial and operational leverage of companies. We look at the association of the sectors to the Colombian GDP, the company's vulnerabilities to the peso depreciation, and more importantly, the financial stress arising from unhedged currency mismatches in companies' balance sheets, as well as the company's ability to meet their short-term obligations. We arrive at our estimated prices by using a free-phase dividend discount model, and in addition to this, in some companies, we also employ a discounted cash flow analysis. Finally, as I mentioned before, we use multiple assumptions to arrive to what we think is a fair value for the stocks, and more importantly, the timing of the recovery will not necessarily be in the short term.
Andres, what companies do you highlight as the most undervalued according to your analysis?
Given that we analyzed several topics on different dimensions for all the companies listed in the Colcap Index, the complete analysis for each company must be read on our report. I will limit the list of our findings to the most undervalued stocks according to the price-to-book multiple and stock valuations based on two-phase dividend discount models, which definitely take into account a deep and differentiated decline on business activity during the current year. From a relative valuation standpoint, the market cap of Cemex Latam Holdings and Cementos Argos from the construction materials industry and Bancolombia, one of the largest banks in the country, are currently below their book values. On the other hand, from an intrinsic valuation standpoint, the companies whose stock prices are below the price obtained as a function of dividends include two electric utility companies, ISA and GEV, precisely the stocks that suffered the least during the recent price correction. Finally, the companies that are undervalued by both criteria include the holdings Grupo Argos and Grupo Sura, as well as Celsia, a power generator.
And finally, Roberto, tell us which sectors should lead the economic recovery.
Hello, I am Roberto Paniagua. Regarding the sectors that would lead an economic recovery, we have manufacturing, construction, healthcare, utilities, and agriculture, among others. Some of them are in the Colombian Stock Exchange. In the utility sector, companies which have participation in electricity transmission and gas transportation segment should have good results, as Grupo Energía Bogotá. On the other hand, Celsia is more exposed to energy demand reduction because of its participation in generation segment. In gas exploration and production, Canacol has low production costs with fixed price in dollars and long-term contract sales, which will bring cash flow stability. In consumer staples, Nutresa should have good operational results. In the construction sector, although it should be important in economic recovery, the cement companies are facing a challenging environment. Regarding the companies with participation in different sectors, we have ISA, with revenues in the electricity transmission segment are paid as per availability and reliability of the transmission network. On the other hand, we have Grupo Argos, with some road concessions benefiting from the ANIS contribution and traffic top-up payments. And last, the financial sector will act like a support of the economy. We invite you to visit our website, investigaciones.corficolombiana.com, to access to the full report and others reports from equity research.
Andres, Roberto, and Daniel, thanks for being with us today. Remember to join us on Spotify, download the podcast, and leave a rating. You can follow us on Twitter, Facebook, LinkedIn as @CorfiColombiana. I'm Victoria, your host, and you can join us in our next podcast.